you were starting to touch on this idea of like, when's a good time to buy, when's a good time to sell, what am I actually owning here? So yeah, continue on that route, because there's two crucial questions as investors. What are you going to buy? And then when are you going to buy it? And that also eventually becomes when you're going to sell. But the data-driven approach that someone like yourself takes is something that I can take huge insight from. So yes, like you were thinking, like I hit this bear market and what was happening. And so how did that evolve into what you do today?
Yeah, so it's funny. In the world of on-chain data, you can basically see every coin in the whole Bitcoin network. When did it last move? And what's interesting about that is you can say, well, okay, let's say that there was a coin that last moved in 2018 and they still hold it. I can measure their cost basis. So I know when they acquired it, at what price. And if let's say they bought it $10,000, if we're trading at $100,000, that dude's holding a $90,000 profit. If he spends it, I now know that somebody who was around in 2018 and has been through a very similar journey to myself is now taking chips off the table. Congratulations, well done. Now, if one guy does that, it's a data blip. If a whole pool of people start doing it all at the same time for weeks at a time as the market's rallying, what's really interesting is if you show a bunch of charts that I use to the uninitiated, people who are brand new to markets, have never seen a financial chart in their life, they would say, oh, look, price goes up when this thing goes up. That must mean that when this thing goes up, it's good. It's like, no, that thing going up is people selling and taking huge profit. Now, the market can keep going through that, but eventually that is quite literally the mechanic. That is the thing that puts tops in. Now, I did a talk in Nashville for the Bitcoin conference. And it was very interesting, actually, because my talk was on, there's a few different elements, but my talk was on the same time as Michael Saylor. So I think I had like 6 people or 9 people in the room, and one of them was my co-founder. So anyway, what was really interesting about that, and I actually opened by saying this is like my Andreas Antonopoulos moment, right? Speaking to an empty room of chairs. However, everyone's in the room with Michael Saylor, who's going to tell them what he always tells them. Bitcoin's going to 13 million over this course of the next 55 years. And if you just huddle on, you'll be, glorified and turned into an angel. Whereas what my talk was about was a lot more practical, saying back in 2018, when I'm being forged in the fires of a bear, I got no idea what I'm doing. And I look at the chart and I go, this is actually when I bought my first Bitcoin. And then I overlay one of my metrics with no axes, no nothing. It's literally just the red and the green showing when it's up or down. And what I showed is that when I was buying my first Bitcoin, the smartest guys in the world were taking the fattest profit. I was buying off them, right? Unaware of that this was happening. We got our first sell-off and then it rips. And I was like, oh, cool. This is the dip that I was looking to buy. I should actually buy here because it's going to go to a new all-time high. That was the relief rally where not the smartest guys, but the second smartest guys were taking the second fattest profits. And then what happened is the market keeps going down. And eventually I go, oh man, we're at like 6K. I'm like, I know what I'll do. I'll sell here and I'll buy it back lower. And then I look at my metric again. And that's when all the guys like me were also taking the loss. They've bought at 20, they've bought at 16. They're now selling at 6, thinking it's going to 2, and it goes back to 14. And you're like, what am I doing? And then I keep going further along, and you go on the internet, you look at YouTube, and you discover a new indicator. You're like, yeah, cool. Now I'm a master trader. I got my new indicator. It tells me to buy. No, sell. And for whatever reason, there's 2 areas where I've discovered this, and I know this is like widely talked about: business and markets. Those 2 things, almost always your default human, the thing that you would assume you should do is almost perfectly incorrect. So they're the 2 fields that I've discovered that you have to just question everything and almost do the perfect inverse, or at the very least challenge the idea of this is what I wanted to do. What would happen if I did the opposite thing? And they're the 2 realms where you really have to do that. So anyway, after all this journey, I can now look back and see all of my decisions and how I created those on-chain prints of buying and selling and doing dumb stuff. I can now see that and now apply it to today, because I know there's always going to be dumb guys. There's always going to be smart guys. Someone's going to buy the bottom and sell the top. I care about what they're doing. Someone's going to buy high and sell bottom. I also want to see that because I want to be the contrarian. I want to be the opposite. I want to be the metric and do the opposite of what the dumb me was doing way back in 2018.
And so another thing to highlight here, I think so fascinating, is the idea that on-chain data is in itself a nascent market. It's never really existed before in the way it does today. So can you explain to someone why that's the case and some of the coolest kind of aspects to that?
Yeah, it really is fascinating. You're absolutely right. It's very nascent. I would say there's probably, like, in terms of people who are competent at using it, you'd be lucky if there's 100 people in the world who actually
Mm.
know what's going on here. It's a very, very small
And
group.
that's why your newsletter is so brilliant. So anyone listening, I highly encourage them to go out and buy a
Yeah,
subscription.
and look, the thing is that it's not like the on-chain data is interesting, but as with all things, you can be a good analyst, and you can be a not so good analyst, right? Now, obviously, I try to be the best analyst that I can, but when you look at these things, what makes on-chain data for Bitcoin so interesting and so special? Because there is on-chain data for every network. Now, when I say on-chain data, just to be crystal clear, because we're looking at blockchains and you can see sequentially who owned what and when, it's basically like a snapshot every single day of who owns what, how long they've held it, what price they paid for it, and that changes every single block. So what we do is we aggregate all this information, and we use various things like cohorts. Show me people who bought recently versus people who bought a long time ago. Show me if they're locking in profit or taking losses. Show me if they're hodling their coins or if they're spending them. We can basically aggregate and look at how people are positioning, what they're doing. Are they moving coins in and out of exchanges, so on and so forth. Now, for all the other chains, there is on-chain data, but the problem is that there's a lot of noise. Oh, that was a token sale, or that was some team's vesting, or that was a VC raise, or there's all this other stuff. Is that really profit if they're just putting it in and out of this, whatever it is? Like, there's all sorts of complexity. Whereas in the world of Bitcoin, its only job is to move Bitcoin from A to B. And 80% on any particular day of Bitcoin moving is going in and out of exchanges for buying and selling. That's basically what people use it for. It's also the most hated, loved, feared, and revered asset ever. There's never been anything like it. Maybe gold, but I think Bitcoin's surpassed gold in that some people absolutely despise it and some people love it and would do anything to save it, right? So you've got this really interesting dynamic where it's such an emotional thing. And so is profit and loss. The high volatility also makes people extremely zealous about it. Their entire net worth is tied up in this thing. So they make decisions that are very human. So I'm positive that all of this data and these behavior patterns, the psychology, it's a constant. It applies to every asset. This happens in Tesla, it happens in gold, it happens in everything. But we can see it. That's what's so interesting about Bitcoin. We can see it. And not only we can see it, it's not hidden behind the NASDAQ data feed. It's not hidden behind, New York Stock Exchange or some bespoke trading hedge fund. It's the blockchain, and everybody who downloads the network can get access to it. And that's what makes it so interesting. It's like you can't stop this data. It just is. And really, it all comes down to how do you use that information to make better decisions? Because you can. Not many people do, but you absolutely can.
And it strikes me as the idea of you're measuring emotion with something completely unemotional. And it's perhaps the first time it's ever been possible, expressed through price and value as a language. So the idea that you can measure human behavior in exchange for, look, if you look at historical data of a stock index or something, but Bitcoin doesn't change. It hasn't changed since it was first created, essentially. So it is unemotional. Literally, it's just facts the whole time. Or they call it, like, the ultimate truth is the Bitcoin blockchain. Like, boom, boom, boom. It just does the same thing.
It's the only thing you actually know is true. Like,
Correct.
if you honestly break it down, because nobody can alter it, it is actually the only thing that you can reliably say did happen. Because what else could you possibly say did happen? I know that block was mined, and I know that transaction was finalized. You can't actually say that about anything else. Anything else could have been changed, could have been tweaked, could have been a lie, could have been an incentive. Bitcoin, you can't lie. It just is.
It's the truth laid against the fixed set of rules. Oh, look, there's this, token whatever on a crypto blockchain. It's like, well, hang on. How many tokens have they got? Oh, well, we don't know how many they're going to print. Okay, well, what are you measuring? The behavior you witness on Bitcoin is a better representation of it because of the fact it's on this kind of base layer of truth. The work you're doing is an extraordinary exploration into human psychology. And that's a real, like, you didn't expect to get there, right?
Absolutely not.
You're
No,
like, my
and that's the
salary
thing.
doesn't work. I cannot buy a house. And suddenly it's like, I'll tell you what about human
Yeah,
psyche.
let me start studying how human beings trade this strange internet money, and
Mm,
come up with all sorts of weird insights. But like, they say that past performance can't predict future results, right? You hear this all the time in finance, and that's obviously true. But what you can predict is how human beings respond to fear and greed. So if we look at previous cycles, because we can see where everyone's cost basis is, let's say we go to the bottom of bear markets, the darkest time, market's been going down only, we're down 80%. Who's left? Who's actually truly left holding this thing and still buying after an 80% drawdown? Very, very high conviction people who've done the work. And we can see when the unrealized loss, just the pool of coins that have been bought at a higher price, you can see how much damage is still held. And there's this like threshold of how much damage needs to happen before every speculator is gone. There's no one left. There's no sellers left. So you can actually visually see when you get to that exhaustion point. You can also see when you get the smallest amount of those old money, people who are buying in that bear market. I look and see when there's not that many of them left. And at that point in time, it's telling you, well, why aren't those guys still here? Why aren't they still holding? Because if they thought it was going higher, they probably wouldn't have sold it. But because they have sold it, it tells you a story about their conviction. They're like, you know what? It's a little bit expensive for me at the moment. Probably not going to buy as much at the moment. So suddenly you've gone from having no sellers to actually having all the guys who did buy at the bottom, they are now distributing at the top. And, who are they selling to? People who don't have that conviction, who don't have that experience. You've probably heard about Bitcoin for the first time, or they're finally feeling so much FOMO that they've got to get in. They're the least likely people to be able to weather some kind of a serious drawdown. So you can start to see these thresholds of when human beings panic, when do they make decisions, how much pain can they handle, and then if that pain is too much, you pay attention for when the market starts to get up and against that threshold, and you kind of pre-make your decision. If we get here, I'm hands off. I'm going to walk away and just let this thing do its thing, because we start getting into risky territory. See, it's all about human behavior.